Alrighty, ladies and gentlemen, welcome to another video on the channel. And in today's video, I wanted to go over some of the frequently asked questions that you guys had for me. But before we jump into that, let's take a look at performance, right? And see where the markets are at. Uh, all of the SaaS companies have run up significantly in the last couple of days. So, yes, see, we have all green except for these three companies: Microsoft, Netflix, and Oracle. But give it some time, they will be green as well. And man, Axon is amazing, right? Like we called it at 374, went up to 600 plus, and 45% in, let's say, how much time? May 27th, so 2 months, 45%. That's incredible, right? Costco, Home Depot, man, like everyone was asking me, like, why are you sending Home Depot alerts? And it's up 5%. Although you could have bought it at significantly less price. Uh, but yes, this is really good news. All of our alerts are working really well, except for like a few. Give them some time, they will run up as well. And yes, we haven't even looked at some of the companies that we called out in our newsletters, right? So we had ServiceNow, uh, Intuit, Salesforce, Microsoft. All of these companies have run up since we called them a month ago. So yes, this is really amazing. But let's get into some of the FAQs that you guys had for me. And the very first one that a lot of people had was that what do you really mean by an all-in alert or a buy alert or a sell alert, right? Or how much money do I put into a stock when an alert is sent? So the thing is that, see, investment is a very subjective thing, right? And all in for me might be an all out for someone else, right? Uh, Maybe I have more conviction in stock uh, than someone else, and uh, at $350, Microsoft is a screaming deal for me, but for someone else, it might be a panic sell, right? We don't want to fall into that category of investors, but that's one thing. The other thing is that if I have, like, let's say $1,000 to invest in, and you have like $20,000 to invest in, so again, this becomes very subjective, right? So if I only have like $1,000, I might be able to max put into Microsoft like $1,000. But for you, uh, you could put like $10,000 into Microsoft and still have $10,000 left to invest in other stocks. So it is very subjective. But what I wanted to emphasize over here is that when we send a buy alert versus a buy heavy versus an all in alert, we mention that, when we trigger a buy alert, we say buy this stock in small chunks. For buy heavy, we say like medium chunks. And for all in, we say buy in large chunks. So, what we mean by that is that uh, again, this is subjective, but just for an example, right? If you have $1,000 to invest in a stock and you get a buy alert, let's say you put like $50 into it, right? That's a small chunk for you. On the buy heavy level, you put like $200 into the stock, and in an all-in level, you put like $500 into a stock. So you have to define based on your situation and your risk appetite and your conviction in a stock, how much you want to put into it, and what a small, medium, or large chunk looks like for you. Another thing that I want to point out over here is that so if you look at these numbers over here, right, we've sent out so many all in alerts for Microsoft, and the average price that you see, the $395, this is an average price if you bought the same amount of Microsoft stock for all of these alerts. But that's not how you should be investing. the lower the stock price falls, the more you buy. So for a buy heavy alert, you might buy one stock. For a all in alert, you might buy 10 stocks. So if we weight the different alert levels, then the average price might be different. But just to be kind of a bit fair, because this is very subjective, we've just averaged out the entire the prices across all alerts. Also, uh, the most important thing that I want to emphasize on over here is that you don't just buy a stock when the alert is triggered. You keep buying the stock while it is below that particular level, right? So you see, we sent out a buy heavy alert when Microsoft was at 473. That's like if Microsoft goes up to 473 now, it will be roughly a 20% gain, right? So but we did send out all in alerts at 390, 380, 360 even. You don't just buy when these alerts are triggered, right? You keep buying while the stock is below this. So that's how you actually time the bottom. Uh, when the stock falls below a certain level, you have conviction in that stock that hey, this stock will only rise from here. As long as the stock is below that level, keep buying on a daily basis or like a weekly basis, maybe even hourly basis, right? The more like a stock can fall like 20% in one day. Keep buying while the stock is below this level. So that's like to answer like what the all-in alert means or how much money you should put into a stock. The next question that some of you guys asked is that how much time do I have to invest in a stock when an alert is triggered? So this again depends on the situation. Sometimes a stock might touch its 208 weekly moving average and just bounce back from there and never come back to that level. But other times it might fall further below and stay below 208 weekly moving average or below the price when RSI 30 was triggered uh, for an extended period of time. Like look at Microsoft for example, right? It still is below its 156 weekly moving average. It's above the 208 weekly moving average, but it is still like a good deal. Uh, so you can still buy it and be very profitable in the next few months to a year. Uh, but there's no hard and fast rule that when an alert is triggered, you have to buy the stock immediately, and that's not even possible at some times, right? Because sometimes our alerts are triggered even at like 3 a.m. or like 4 in the morning, and it's not possible for you to wake up and just buy open your brokerage and like send buy alerts. Some brokerages might not even allow you to buy stocks during extended hours or at 4 a.m. in the morning. So try to buy as soon as you can when the alert is triggered, but it is not necessary that you buy immediately. I would also not recommend you to FOMO buy. If even if you miss this opportunity, that's all right. Like there are plenty of opportunities in the market, right? If you miss out the boat on Microsoft, there might be an opportunity in Palantir. There might be another opportunity in Nvidia tomorrow. So don't panic. Don't feel that you missed out on an opportunity. And especially I can understand that this platform is very new to you. I have been trading or like investing in these stocks based on my analysis for a while. So I have like good conviction in these alerts. I have been buying stocks, especially like Microsoft, Palantir, Netflix, Home Depot. I've been buying them very heavily. Uh, but for you, you might need to build conviction. So one option that I always mention in the alerts is that do nothing, just simply monitor the price action. That is basically meant to help you build conviction in these alerts. So the more you see that, hey, like, after this all in alert, yes, this stock went up. I could have made some profits. That is kind of a learning opportunity for you, so that the next time you get an all in alert, you might have more conviction in it. So, the next question is, are you tracking only RSI or and SMAs, right? So, no, not all the time. I have many alerts that have still not triggered, that are based on some other technical indicators, and also price action. Uh, the thing is that RSI and SMAs are the strongest indicators, especially over the weekly charts, or the weekly time frame, and they give you the best picture available uh, for a particular stock, based on technical analysis. What I am trying to do is that I will uh, focus the next few months on building an alert confluence feature. What that means is that, let's say, if we have a stock that falls down to RSI 40, and we say that at RSI 40, this stock is a buy heavy, and the same stock at 150 weekly moving average is also a buy heavy. Sometimes what happens is that both of these uh, indicators might trigger, or the alerts might trigger at the same time. So currently, we will send out two separate emails or alerts that tell you, hey, like, buy heavy because the RSI is under 40, buy heavy because the stock price is below 150 weekly moving average. What we want to do with the alert confluence is that when uh, these two alerts trigger at the same time, we upgrade the alert level from buy heavy to an all in, because when multiple buy signals trigger at the same time, that strengthens the overall buy rating for a stock, right? uh, and so for example, if two or more like buy heavy alerts trigger for the same stock, then we say that, hey, this is no longer a buy heavy, this is an all in. uh, if we trigger more than two, like, all in alerts, then we might just say, like, hey, this is a 2x all in alert, or like 3x all in alert, something like that. All in basically means like you should probably consider buying uh, this stock with all of your money. uh, 2x all in alert will definitely not mean, like, go into debt and buy. You should avoid debt as much as possible. But yes, like, the 2x or 3x all in, or like, 2x or 3x buy heavy alerts, if we do that, it's just like, the level of confidence that we have in the stock at this price. So, long story short, no, RSI and SMAs are not the only technical indicators that we are tracking. We have many more. We have MACDs, we have EMAs, we have Bollinger Bands. We will be adding more, but these are some of the strongest ones that uh, give the best signals overall. Moving on to the next question, will you track any market volatility events? Yes. Currently, we track the earnings of a few stocks, which are basically like volatility events for those particular individual stocks. But the market also moves on other events like FOMC meetings, PPI, CPI reports, and JOLTS reports, ADP job data, so on and so forth. So I personally don't track them very aggressively myself, but this kind of information might be useful for some of you. So I am adding these events, and they'll be out very soon, right? Next question is, can I do options based on your alerts? Hey, see, you can do anything that you want, right? uh, but I would recommend that don't do options a lot, uh, especially like you saw, right? Like Microsoft, we sent out so many all-in alerts. Home Depot, we sent out so many like all-in alerts. Even today, like if Home Depot falls below like 340-ish, you'll get an all-in or like buy heavy alert, something like that. That's because like these companies, they still haven't recovered fully from the dips, recent dips. So if you say that, hey, like, we got an all-in alert, like it's time to go, like, all in and buy options, buy call options, you might lose all of your money. And that's in general true, uh, especially when you buy options, buy calls or buy puts, your entire principal can become zero. The better thing to do is that when stocks fall down, like buy the stocks themselves, don't buy the options. Wait for them to run up, and when they run up, then you sell options, right? Then you sell calls. What that does is that yes, you might miss out on potential upside, but at least like you're still like hopefully you're still profitable when you sell calls and your like calls get triggered. So this is a somewhat advanced topic. I don't want to go too deep into it, but if one thing that uh, uh, I would like to tell you to take away over here is that uh, avoid buying options as much as possible, because when you buy options, your money can become zero. Always prefer selling options instead of buying. So yes, you can do options, but my philosophy is to buy stocks, buy good companies for the long term, right? So I'm not too focused on options at this point. The next thing is, do you give suggestions about the next uh, stocks or sectors that will run up? The short answer is no. The reason being that there are so many companies in the stock market, it is not possible for me to track all of them. And B, no one can predict the future, right? Maybe you can guess what might happen in the next couple of years, but if you say like, hey, which stock will run up in the next 5 years, no one can tell you that. I can I can list down all the companies that are listed in Nasdaq and NYSE, uh, and I might be correct on a couple of them, and I can brag about it. But what has worked for me in the past is that instead of chasing the next big thing or chasing the hype, the current big thing works best for me, right? Uh, Apple, Home Depot, Microsoft, Netflix, Google, Tesla, all these companies have made me hundreds of percentages of money of returns. I Without having to chase the next Tesla or the next Nvidia or the next Apple, right? I have made uh, a lot, and this is coming from losing a lot of money, right? Because when I was chasing the next big thing and when I was buying options, buying calls, and buying leaps, uh, I lost a ton of money. And this is where all of this, like, all of these investing lessons and principles are coming from. So, no, I won't suggest any next sectors or next stocks that will run up. I am not in the business of giving you five new alerts or like five new stocks to track or five new companies to keep an eye uh, on a daily basis. I don't do that. Uh, I identify good buying opportunities in good companies uh, and make money that way, right? Uh, Moving on, uh, the question is that you give so many choices when your alerts are triggered. How do you know what to do? How do we know what to do? Right. So I guess this person is referring to this stuff, right? Like you can consider buying Oracle stocks in bulk, or like this is a risky thing, like buy call options, buy leaps, so on and so forth. There are so many options that you can do. Yes, there's a lot that you can do, and there's a lot that you cannot, like you should not do, that you should avoid. Again, this is a bit subjective. What you want to do, how much you want to buy, is completely up to you. And one of the options over here is like do nothing, just monitor the price action and see where Oracle or like XYZ stock goes from here. If you want to build conviction, or if you just want to monitor like what happens from here on. What to do is based on your conviction in the stock, your risk appetite, and your situation, financial situation, right? Oracle, I think it is a bit more risky than compared to Microsoft or Home Depot. So if you're a bit risk averse, uh, you probably should not buy Oracle stocks. Just stay away from Oracle. But if you believe in the company, if you've tracked it for a while, if you think that this is a good deal, uh, you could put all of your money into it, right? So there are a lot of options. You have to think about what you want to do. I'm just giving you the options and presenting you the opportunity. Okay, the next question is about pricing. So next two questions actually, like I would like to combine them together. So the first part is Robinhood charges only like $5 a month for their gold membership. Why is Iceberg Stock Alerts membership so costly? And the second part of the question is how is Iceberg Stock Alerts different from other platforms? Like or like to rephrase, some of you have also said that hey, Robinhood also gives me an option to set alerts. I get notifications. Uh, I don't think I really need Iceberg Stock Alerts. Well, if that works for you, then good for you. But first of all, the first part of the question, Robinhood charges $5 a month for gold membership. Yes, that is much cheaper than what we are planning to charge on a monthly basis. Uh, a Robinhood is a huge company, right? They don't just do these alerts. They are basically a brokerage platform where you can buy sell stocks. The way they make money is not through their gold membership. The way they make money is when you trade on their platform. Iceberg Stock Alerts brings you good ideas, good investment opportunities on good companies. Robinhood doesn't do that. They don't tell you like, hey, this stock is below this level. It's a good buying opportunity. They just send you a notification based on the alerts that you set, right? Iceberg Stock Alerts, these idea bugs are alerts that I have researched. I have personally invested my money into these companies based on these alerts, and those are the alerts that you're receiving, right? Uh, the other thing is that in Robinhood, you have to do your own research, you have to set your own alerts, and the notifications you receive are either in-app or push notifications. And I have done that. I still have a lot of alerts on Robinhood, but there are some problems with that, which is why basically I started Iceberg Stock Alerts. Uh, my main issue was that I receive so many notifications from Robinhood on a daily basis. Plus, I receive so many notifications from the other apps that I have installed on my phone that I miss a lot of good opportunities, the good buying opportunities in the stock market. Right? That's one thing. The other is that Robinhood won't trigger your alerts in after hours. That is not the case with Iceberg Stock Alerts. Uh, we trigger alerts even at 2 a.m., 3 a.m., uh, 7 p.m., right? We trigger alerts as and when they happen, right? Uh, Other than that, like my whole idea is that I don't want Iceberg Stock Alerts users to install another app on their phone, track another like messaging site like Telegram or like WhatsApp or Discord. I don't want any of that. I want to send alerts to my users so that like these alerts are visible and available to anyone, right? Uh, Emails and SMS, these are my priority. Everyone has access to emails, everyone has access to SMS. So you don't have to keep track of another like app for this. Uh, the other thing is that uh, I have myself like enrolled in a few memberships from these YouTubers, finance YouTubers, and finance gurus online. They charge like 12-1500 dollars for a year. On the lower end, people charge like 50 to $100 a month for daily alerts, right? These are alerts that hey, like every day you wake up at 6 a.m. They will send you a list of stocks, uh, entry points and exit points for them. You have to keep track of each and everything. You have to and the other thing is that you will get overloaded with all these new uh, investment ideas on a daily basis. It's just too much to keep track of, and that's why I have stopped doing all of that. If you miss the entry point, you will stress about that hey, I missed such an amazing opportunity to invest. Like I could have like made like 300% returns today, or like 700% returns in just like a couple of hours. Or if you miss the exit point, then you might lose your entire money, and you be kicking yourself saying that hey, I wish I didn't like do this trade. I wish I hadn't attended this meeting, or like I had woken up like 5 minutes earlier. It's just too stressful. It is way too complicated. I don't think investing is that hard. It is very simple once you understand a few key principles, and that's what I want to provide to my users. Which is why actually, if you see, our membership is very affordable compared to other people that are providing similar, I would say worse uh, products. Uh, Mine is like sit back and relax and let your money do the work for you, uh, so that you can live your life outside of your screen, outside of your Robinhood app. Uh, so at $30 a month, I think it's a good deal. But for you, the pilot program users, it's an even better deal. I think $150 for the entire year. Uh, Even if you had put like a few $100s on in Home Depot stocks, if you bought like a few Home Depot stocks when we triggered the alerts, you would have made it back. You would have already made it back. Like Axon, you just bought one stock, you would have already made it back. So I don't think $150 for an entire year, that too for 2 years, is expensive at all. It's a really good deal. Think about it. Uh, Obviously, no pressure. You don't have to, uh, buy the subscription. Uh, and all the best to you for your investment. I hope you make a lot of money. And coming back to the question, the second part is like, how is Iceberg Stock Alerts different from other platforms? I kind of already spoke about it. Uh, how we are different from Robinhood. I've tried out a few other like platforms, Fidelity, E-Trade, uh, I couple of more, like I don't remember the names, but none of them are as powerful as Iceberg Stock Alerts, right? Fidelity, they don't uh, give any kind of like alerting system at all. E-Trade, you can only like set alerts if like on price action, like if a stock falls below like 5% or like 10% in a day. I think that is useless. That is absolutely useless. And that's like way underpowered. Uh, we are providing alerts on technical indicators. We are providing alerts on, like, earnings, uh, upcoming earnings, and price action. We are going to expand to include more types of alerts, uh, to track more events, or market movers. We are going to add features to do, like, financial analysis and fundamental analysis. We are building an AI tool for that, and I believe, like, the value that we are going to provide is going to be substantially, thousands of times more than what other platforms provide. So yes, icebergstockalerts.com is very different from other trading platforms. We don't chase hype. We don't, uh, you know, provide, or, like, give like five new stocks to invest in, 10 new stocks to invest in. We don't have that kind of a list. We have a handful of stocks that we built conviction on over time. These are really good companies, really good businesses that won't vanish anytime soon, and that have a historic record of giving good returns on investment. So, yes, Iceberg Stock Alerts, very different from what you might have come across. So, I guess that's pretty much all for today. These were all the questions that I have received from you guys, and we have kind of way over time. So I'll see you in the next one, and hopefully, you have good uh, rest of your day, and uh, all the best for your investing journey. See you in the next one.